Good evening, guys. Ken at Tortoise Capital, nightly strategy podcast for December 21st, 2022. We'll start with sniper trade of the day. This is U.S. Steel, 3-minute charts. Here's where it closed yesterday. Here was the gap up. This was the lowest low of the opening 3 minutes. Excuse me. And here is the opening range 3 minutes. The highest high, the lowest low. It opened, it sold off, went up this high, came back to here, and closed right there. Then opened and then took this out, and that gave us the OR3 entry. That opening here sold off to here and then took this out. So when we get that opening range 3 entry and we hang our initial risk box, we're looking at a stop here. And as soon as we can, we want to get our entry above. We want to get our stop above our entry so that we can lock in no lose plus dinner for 2 as soon as we can. So let's see how that shapes out. Within about 4 bars, we get a significant move in our favor. And that 4th bar opened here and closed with a strong move up here. Now, you don't have to wait for that to close to get your entry. One thing you can notice is that the second bar after entry opened and closed almost in a doji, then opened and then took out that high, and then the next bar opened and took it out. So somewhere in this live move, I think is a reasonable place. You've seen, 2 rising lows already, so you could get your stop up into here, I think, pretty easily. That would not be controversial. And you'd have your no lose plus dinner for 2. And you would be treating this as a science project. Now, depending on your goals and objectives, you might decide to lock in half of that nice gift because you're already looking at one. A stop here would lock in an R. This would lock in a little more than an R. Excuse me. So, take your pick. You might pick stop 1, stop 2, or stop 3. As long as you are at least at stop 1, you've achieved the objective of the opening, which is to get your risk out and a little bit of pay on the side for the trouble. So if you had taken 2 or 3, you were out. If you had stop 1, just locking in the science project, you were good. You're still in. If that gets you out, then that move, if this downward move got you out of the position, then 1, 2, 3 should get you back into the position, or you could wait. Sorry. Straight down party lines to make former President Donald Trump's tax returns public. Oh, stupid phone coming to life on its own. So this 1, 2, 3 would get you back in. You might wait for that bar to close and re-enter here above the RL10. You might have waited to get in at the emerging dragon. Any one of those entries is legit. I have even entered as early as a 2-bar universal entry. So any one of those entries for re-entry would be fine. I'm still in because of the no lose plus dinner for two. But you're not wrong if you decide to cash here and then re-enter here or here. That doesn't hurt you at all. You're still right back into the same trade, and then you still have the same issue about deciding you might want to go ahead and put a second entry there, even if you re-entered here or here. So you have a lot of choices as you read the volatility. In any event, you get an emerging dragon entry here. By this time, no matter what your preceding efforts were down here, the initial stop on this guy is right about there, and by this point you should be locking in your second no lose plus dinner for two. On this one, I had the two positions on. This one gave me that large move up, and then a 1, 2, had already come back a full R, and because I got two positions on, I just take that one. So the first one scores a little over 2R. This one gives me about half an R. Check or hold? So that's what our that first series looks like. If you're into it and held it from that first position, then you get 1, 2, 3 units of reward. This one gives you about a half, so you'd be anywhere from 3 to 3.5 of opportunity on that one. Okay. When we get the supported fall crossing, a peak, we get the R10 crossing the baby dragon. It penetrates through the dragon. The PSAR has already flipped. I take the short position, standard risk box. I'm looking for it to come back and test like the opening or the low of the day. It's a grind. I just decide to get out of it. This one was I classified as a failure to fail. It had all that opportunity, from here to fail, but it didn't. And so when you combine that with the strong first move, failure to fail, that feels like a base, and you get the PSAR flip. I just take the PSAR flip, standard risk, taking it to the upside. Check or hold? That one's a quick half-hour loss. Now I classify this as failure to follow through. It had all of this time to go and to take out the previous high, but it did not. It gives me these lower highs. So stop and reverse. Standard risk box. Still looking for it to get back here. Excuse me. Scratches me out. I stop and reverse to the long side. I don't care. Just following price. Get a little bit of pull out for about an R, maybe a little less, maybe call it half an R. This is now feeling like a lower high. So we'll take that little half R. We worked hard for it. And leaving it for the rest of the day. There just was not much else happening. That was like 1, 2, 3, 4 in a row that only earned half. And there were other things that were working better in the afternoon. And so we take about 3R out of U.S. Steel from that nice run up in the morning and ring the bell. Check or hold. Excuse me. All right, we'll shift to the 30-minute chart. So now we're looking at market health checks. This is SPY on 30-minute bars. Here's our 5-day look. Here's our 10-day look. Here's our 10-day high, our 10-day low. We've got a little bit of pull today. The most important about today was that yesterday's support level held all day, did not fail further. So I take that as a minor win going forward, favoring some more continuations on the upside. On the daily, you can see that it was from yesterday's close, it was a little gap up, held, and had a modest move up to stop right at the edge of the dragon here. And there's the spine of the dragon, and there's the peak of the dragon. And that's going to be tomorrow's PSAR right about there. So it has a little bit of no man's land to get through tomorrow. It has to get through that noise to really make us interested in the upside. It has to get above 406.5 to break the 10-day high and the dragon peak. So it's got some work to do. If it rejects the dragon tomorrow, we'd be looking for signs like if it couldn't hold today's low, and then if it couldn't hold yesterday's low, the 2-bar low, that's also the 10-day low. And that would be a clear signal to be short. And then if it can't hold the 30-day low, which is not far off, that would be an even stronger signal to the downside, in which case 365 is back in play. So tactical short if it can't hold today's low, second position if it violates the 2-day low, third position if it breaks the 30-day low, and that's what that looks like. But tentative long here if it breaks above today's high. I think it has to get through the dragon and or the PSAR to get a second position in. I really want to see it get above that to go, and then a third position above like 406.5 to really go. Okay. Let's look at the sectors. We'll take a look at our indexes first. The S&P, 1.5%, the baseline. Diamonds were stronger at 1.6. The Russell, the strongest at 1.7. Q slightly weaker at 1.45. So pretty tight shot group here in the 4 U.S. Equity indexes. The weaker indexes, emerging markets only up 0.9, treasuries up 0.25. Still in all, a pretty tight band of rising strength today. So we should take that to heart. A quiet day in a bear that drifted slightly higher. I mean, are the bears not hungry? So a slight weakening of the bear case. So what was stronger? Let's see. Finance, 1.5. Here's a nice stack of clean energy, consumer discretionary tech, ARC Innovation up to 1.7. ARC Genomics, FANGs, Biotech up to 2.23. Strong in the energy sector with oil exploration, 2.5. Oil itself, 2.8. Uranium, 3%. Individual companies that did really well. Well, here's our metals. We said they were yesterday. They have been seriously in play, and you got U.S. Steel and Cliff up 5%, Alcoa up 1.7, all better than their index and better than all of the indexes. Boeing, another strong day at 4%. Devon Energy, 4.04. Here's your semiconductors. Not too bad. NVIDIA was at 2.59. Texas Instruments at 1.5. And then Intel at 1.5. So generally, all three of those were better than the NASDAQ Tech, and a little better, NVIDIA a little better than S&P Tech. So I would take that as a positive sign for semiconductors, and especially strong sign for the metals, because they dominated today along with energy. Looking for more of that tomorrow. Excuse me. Looking at the downside, there's the S&P again, 1.5. You got marijuana, 1.5. Blended commodities, Mexico, agriculture, Aussie dollar, residential real estate, staples, lumber, and materials down to 0.87 from 1.48 to 0.87. You got commercial real estate in Brazil, 0.7. The other lumber, 0.4. Wheat and precious metals at 0.07, sitting right on the boundary between gains and losses. Tesla didn't sail further today, but Tesla could not participate in the upside. That's bad sign for Tesla, because that's people actively bailing out of Tesla. We're taking short-term profits in that. Weakness, lithium, Bitcoin, silver, Ethereum, and VXX. VXX being down is a hint at another strong day tomorrow. And some of the defensive plays like Bitcoin, silver, and Ethereum being down favors the upside. And so I'd be looking at the broad indexes and more of the metals. All right, let's take a look at how the traders traded today. Excuse me. Okay. Wojcik, back from his sabbatical, is really playing well. Here's Intel on the OR3. Gets the long shot here. Gives back an R, but brings home 1.8. Tries the short play on the PSAR flip. I don't know if that's premature, except for the fact that by the time it does hit your PSAR, it's tested it 3 times and didn't, and the dragon was just pausing. So I don't mind that as a short, but I think you got to stop and reverse there, and then your K2 that peaks here, that should get you out here for a gain. I think I would, rather than scratching that, I'd like to see you get 1R out of that. CRM, Salesforce, gap, harsh sell-off. Here's a 1, 2, 3 entry here. Oh, I'm sorry, that was yesterday's. Okay, here's the OR3 entry, and just crushes it. Single position for 6R. I think somewhere in here we might have been thinking about a second position, because you got 3 in hand, and it resisted the sell-off and kept resuming. So I think you want to maybe look at this. On the other hand, he had span of control. Excuse me. With Devon, so he's up to 6 on his span of control. Devon Energy, this one slightly pays for that one. So that's still pretty good. Tesla minus 2.5 got chopped around in here and wisely shifted to others. This tells you how not in play Tesla is right now. It is bruised. Whereas Apple, which has been lagging Microsoft, he gets a really nice 3.6, which more than covers the Tesla. And then US Steel, he's able to get 3 out of that right out the get go. So that's about 10 to 12R for Wojcik. That was pretty nice work. Wherever you went on vacation suits you. Satya with US Steel on a 3. Here's his OR3. Yeah, so that one gets him out. He plays the 1-2-3 re-entry, adds a second position at the Emerging Dragon and caught a 2. So he gets a really nice move out of the move that was there. And then a couple quick scratches with just a little bit to pay for that one. So 2.3 for the day. Really nicely played. I really like the way you were able to shift right back in and then get that larger position on. So +1 to you on that. Take a look at the reports to bring us home. All right, we remain in bearish normal. We've had 2 days of failure to fail, so that actually boosts it up a little bit. Hasn't really moved the needle on the other ones. That's just a 2-day tactical wiggle. We're right at the 0 line here on risk Z, which is warning us about the fragility of this market. We saw that in the markup earlier. So I would still be playing this as a fragile market 1 day at a time. The real strength has been in energy and industrials. There's Boeing and Caterpillar. Still weakness in Tesla. And lots of auto framers to choose from. Don't be in a hurry on these things. You got a 5DD in Tesla. And maybe it's a 1-day delay on strength in the market. We'll see if they can overcome their bruising. And in the ETFs, just a little bit of strength here in energy, metals and mining, oil exploration, and plenty to choose from. This is a time to be judicious and respectful of the R's that you earn intraday in this bearish normal market. Lots in the auto framer and the squeezes to choose from. Not a surprise. In the sniper, we've got a lot of Godzillas to work with, and we had none yesterday in the tactical symbol set, but today we get consumer discretionary, Bitcoin, and ARK innovation as stealthy little Godzillas right there. ARK looks the weakest of all of those because of that 5-day and 150-day and 30-day weakness. Let's see. In the multi-time frame NDX, you see basically today was if you were a listed stock, you did pretty well, with the exception of Tesla and Walgreens. So that lack of performance there makes them really stand out as weakness. So if we see weakness tomorrow and these are worse than the market, those are safe bets on the short side. Meanwhile, Caterpillar and Boeing, Merck and Coke, Procter and Johnson & Johnson, these guys can do no wrong. And that's everything we want for today. Let's get this published and posted and ready for tomorrow. Take good care, and we'll see you in the chat room.